Grew up in a home. My parents were very heavily invested in the stock market. My mother really got into trading. I actually started trading when I was 15 years old. So that was when I first started trading, 15, and it's been 15 years since then, or 16 years now since then. And just always have loved the stock market, always loved numbers, finance. We try and use a numbers-based approach to give us odds in the stock market, and that's basically what drives everything we do.
Very good. Well, I know you guys are doing this every single day. We're going to get into a few different top trades of the week on this show, but we're not going to get into the weeds too much. We're going to cover some of the top trades and look at what, if you are deciding you want to be a trader, maybe you're new into this, these guys are the ones that you want to listen to for some more advice on how to really get this going. So let's start off with some market trends that you guys want to talk about. I know, Graham, you had a really good look at kind of what to expect in that September-October timeframe. Hard to believe September is already next week, but what do we normally see in the market?
Yeah, I was shocked when I was looking at the calendar today because I was this morning thinking next weekend was Labor Day, but that's this week. And so we'll wake up next week on Tuesday when the market's open again. We'll be in September. Now, if you've been invested in the stock market or actively looking at it for a few years now, you may know already, but September is typically the most volatile time in the stock market. We expect market pullbacks, corrections, all sorts of uncertainty during the month of September, which can sound scary at first, but really for us, it's a good thing. When volatility increases, it just gives us bigger moves in either direction that we can take advantage of. So if you're looking at the normal market cycles, again, September is typically down. If you're looking at the presidential cycle of a new term in office, which is what we're in this year in 2025, it's also trending lower as well. So we expect the unexpected in the month ahead. Basically, I've been calling for a pullback for about 2 weeks now, and I really think we're going to see it here in September coming up.
And Graham, we talked about this a little bit on our show. So far this year, people wouldn't believe it, but we've actually followed the seasonality trends pretty well. It's just that we follow them at the very extreme ends of the spectrum. So when the market's usually up, 3%, we're up 13%. And then when it's usually down 6%, we're down 22% on Liberation Day. And so now the market's been extremely opposite of volatile. It's been grinding, slow. And so I don't know about you, but I would say if volatility does kick in, it'll probably kick in way above the baseline like we've seen all year.
Agreed. If you're looking at the seasonal patterns, it's showing a 2 to 3% drop. Based on what we've seen this year, it would correlate to more of a 5 to 10% drop, which again, that's not a reason to be scared or freaking out. I'm not calling for a crash or a massive scare here, more so a buying opportunity setting up, because if you look a little bit forward, October, November, December historically are the very best times to be long stocks. So I think we're going to see some really sweet buying opportunities setting up here over the course of the next month.
Yeah, for our viewers, a lot of our viewers are more the long-term traders who are looking at when is a good entry point to get into a stock, to hold long-term, maybe when to get out of the stock if it's falling too much. I think that volatility has been hard for a lot of investors this year because there's just been so many extremes this year. But I think if you are trading and you're in that market every day, what does that volatility mean for you?
Yeah, I would say for us, as long as you're willing to make decisions based on forgetting, hey, I was wrong about the stock. I'm not going to, chase it and try to figure out and revenge trade and be right. And actually just look at it and say, hey, what's moving? Where are the opportunities? Especially like Graham and I, we're very kind of mathematically based. So we don't have, hey, I have this big macro idea on a stock and I'm convinced that it's going and I'm going to throw trades after it one day after the next. Basically say, hey, the odds line up, we'll take the trade, win, lose, or draw. It's one piece of criteria in an overall positive expectancy, which is very, very different than probably most of the people listening are used to. They're probably used to, a couple stocks they like or a couple hot picks and hoping they go up over the next 2 months or 3 months or 6 months or whatever. Whereas we really take like a day in and day out approach, but not random, not like, hey, today we like Apple, tomorrow, more of a, hey, if it meets these certain criteria, we're in. If not, we're out. And over a series of trades, we expect to come out on the winning side. So in those situations, the volatility is phenomenal because it's just more opportunities, more trades, bigger win potential. All that stuff, I think, really plays in your favor as long as you have that kind of approach.
Yeah, and two things quickly to add to that. One, we don't trade with 100% of our capital. about 90% of my capital is long-term, is stocks. But we share those stocks with folks who join our opening playbook and closing playbook shows. What's really cool about this month in particular coming up is we're going to be looking to add a few new stocks to that portfolio if we do get that dip. Secondarily, I'm not a huge fan of buying and selling stocks frequently. There's a whole bunch of tax implications with that. What's cool about learning a little bit of the trading side is you can find ways to sort of hedge yourself or maybe make some money on the downturn without exiting stocks you love and paying capital gains or worrying about watch loss and all sort of implications that come with that.
Yeah, absolutely. We just had somebody ask if you guys have your own YouTube channel, and yes, they are here so we can share a little bit more about their shows. These guys literally are live not once a day, but twice a day. I'm going to pull up the QR code you can scan if you want to just check out their show and get on their channel sometime. What time are you guys live every day?
So we're live at 10 a.m. That's what we call the opening playbook. That's usually about a full hour of training and trading and live market analysis. And then we're also live at 3:30 p.m. Eastern, a half hour before the market close, up to the closing bell. So those 2 sessions each day.
Yeah, there's a lot to learn from you guys. And like you said, whether you are trading every day or even if you are just a long-term investor, getting into some of these stocks means that you can find something you like for the long term too. So I'm excited to go over some of the names that you have for us today. The first one is nothing new, but this is a stock that a lot of traders had a heyday with over the last 24 hours, and that's Nvidia. What can you tell me about what you guys were doing on that yesterday?
Yeah, well, Nvidia is a great example because it kind of falls in that criteria. Probably most people wouldn't have traded it the way that we traded it yesterday in our closing playbook. And by the way, when I say traded, I don't mean that we just talked around it. I mean, we gave the exact trade away to everyone live who was on the show yesterday. And so a lot of them traded it as well. That's kind of a big part of what we do, is actually show you our accounts, our live money trades, give the exact details away. And it was funny, Graham actually asked in the chat, he said, how many of you 6 months ago would have never imagined that you were going to be trading options, in real time? And almost everyone said, yeah, I can't, I thought, I was just looking for investment advice, but now I've really learned to trade. So that was really fun. But what we did is we actually traded for a less than expected move. So that's just a fancy way of saying we thought, everyone was pricing in a big move in Nvidia of up to, 8% or so. And we said, it'll probably move less than that. And so we put a certain trade on that basically was around that idea of Nvidia moving less. And we made about an 85% return on that trade for Nvidia. So it was a really great day for us, even though Nvidia didn't do a whole lot of anything.
Yeah. And we didn't just to restate kind of what our foundation of everything, we didn't just say we think Nvidia is probably going to go nowhere. No, we looked back at the previous earnings announcements, how the stock responded, and kind of formulated our opinion based on that. What's a normal move? What are the market makers pricing? And now does that align? And we found that no, it does not align. So we saw a little opportunity there with the gap between what the market makers are expecting, what they're pricing in, and what Nvidia typically does from a mathematical standpoint.
Yeah. And by the way, oh, sorry, go ahead, Bridget.
Yeah, so there's definitely a pattern with what Nvidia typically does at earnings, at least for the last almost full year. Every earnings report, no matter what the earnings report is, the stock likes to pull back just a little bit, and usually nothing too major, but there's definitely a pattern there.
Mm-hmm. Yeah, I think it's in a position where over the course of a couple of years, it made the expectations so lofty that now it's very difficult for Nvidia to kind of beat those expectations. They have to absolutely blow people away in order to get anyone excited, because they just continually crush earnings over and over and over again. And so there's almost a little bit of disappointment even when they are crushing earnings. And that's kind of what we saw yesterday. So that was our play. But on the underlying side, I still think Nvidia is a great stock. We just happen to find a little interim trading opportunity on the short term, in between because of earnings.
Yeah, Graham, I want to go to what you said, like Nvidia is not doing much of anything right now, but is there still any options plays on this stock right now for the rest of this week and into next week?
Yeah, I think that you can trade Nvidia right now. For me personally, let me go back to what happened back in March and April. We, in the opening playbook on February 14th, I said, I think we're going to get a big pullback, looking at the numbers, looking at the data. And sure enough, February 28th, give or take, was that peak. Nvidia dumped all the way down to $90. And then on April 14th, which happened to be the bottom, we said, we're going all in on Nvidia. It's $90. This thing's going to go back to all-time highs. We're going to see it shoot like crazy. It's actually doubled, it's basically where it's at today is practically double of that day that we bought, 100% return on the underlying stock in just a few months. So right now you can play Nvidia options. We do that every day in the opening playbook. However, what I'm really, really getting excited for is here in September, if we do get this pullback that we're seeing based on the data, the kind of opportunity that can set up, because I do not think the top is in. I think we're going to see Nvidia break $200. I think we'll see it go higher from there before we get any sort of real market recession or major pullback in the market. So I just think we're going to have an awesome buying opportunity coming up. But I don't know if that's going to be Tuesday. I don't know if it's going to be 2 weeks from now. I don't know if it's going to be 21 days from now. But that's why we do the show every single day. So we're constantly monitoring. So we see that exact moment. Okay, this is our time to buy.
Yeah, really good advice. That if you're trading and you're looking at options, you really need to do this daily. We are looking at top trades of the week here, so trying to give the audience something of, if you want to play Nvidia this week, what are some options that you would look at?
You want to take it, Graham? I'll say that for me, I would actually continue playing the under expected move for Nvidia versus like Apple, which I'll talk about in a moment. I think is more directional right now. But Nvidia, I would say if you guys are getting comfortable, which hopefully if you start joining the opening playbook, you will be, doing what we call premium trades, then what you could do is you can trade Nvidia in a way where all it has to do is kind of continue staying flat and going nowhere. So a way to do that would be to trade like a credit spread at the 170 level. All that means is that you're buying and selling an option at the same time. Those are the kind of trades we do live every day in opening playbook. And you're looking to collect 20 or 30% ROI just by Nvidia doing anything other than falling down. So if Nvidia goes flat, if it comes down a little, if it goes up, all of those scenarios are going to pay you out on that kind of trade. And so for me, that's the kind of the more defensive or safe trade that I would put on Nvidia versus, like I said, something on Apple that I think actually has true momentum right now. I would trade more directionally.
Mm-hmm. If you do want to play off the chip stocks right now, a good one to look at is AVGO. It's a direct competitor or sister company to Nvidia. And while Nvidia is slightly down today, we're seeing AVGO up almost 3%, gaining market share. And this is not some sort of penny stock that just started up. This is a big stock. It's been on an amazing trend, just like Nvidia. But I think we'll see AVGO continue to climb, even if Nvidia goes sideways or chops around from here.
Yeah, has there been a lot of volatility on Broadcom, or are you seeing this as more of a good long-term play? What are you looking at for options with Broadcom?
Yeah, definitely a good long-term play here. If you do want to trade options and you want the most basic way to do it, you could look out, and I would look to the 17th of October expiration dates. That gives you about a month and a half out here, and just go at the money. So buying a 310 call, or 310 strike call option. Now, if you look at the options chain, if you know what you're looking at, that's going to run you about $2,000 a pop to get in. What's really cool about what we do on the show is we find other ways to trade it where the cost is really going to be like $2 or $200 a pop to get in. So it's a little bit much to maybe get in on here. But if you want a very basic ways to trade AVGO, look for the 17th of October expiration date and then the $310 strike call option.
Great advice. This is the kind of stuff that we want for our viewers, so you can get some actual, plays that you can make right now this week. We hope that you can get some good insights out of this, and then go follow these guys and get even more insights down the road. Nate, let's move on and talk about Apple. Let's talk about how you're trading Apple right now.
Yeah, so Apple, I think, actually is more directional. You and I actually talked about Apple a month ago when it was about $209 a share. It's now $232. So we've got a pretty nice 10% move in the underlying stock since we last talked, but I still like it. So there's kind of two different ways I think you could look at Apple. You could look at the very near term. Just had a little pullback over the last 2 weeks. To go back to 235. So you're only about 1.5% away from that there. Very short-term move. Now, the way that we would play that is something called a wrap order. So again, not to beat a dead horse, but if you're on the opening playbook, you'll get a lot of that kind of training and what we do. But that's a debit spread. That's basically where you say, listen, I think Apple is going to go up over the next couple of weeks. And if it does, it's not going to pay 10 or 20%. It's actually going to pay more like 100% return on that option. So that's where you would buy the 230 option, you would sell the 232.50 option, and you would get a price somewhere like around $1.20 to $1.50 for that option, and you would look for it to go up about 100% in value. Now, for most people, that's a lot. They've never traded a debit spread in their life, but that would be the short-term play. The longer-term play is not just to hit the 235 high from 2 weeks ago, but to actually trade it up toward the 260 high from several months ago, which I think Apple does have the potential to do. Now, again, Graham mentioned September is probably not the strongest month to be buying a stock like Apple. So maybe you wait and kind of see if you can get it down at 225 or something if it gets a pullback. But I think if it does, you could actually feel pretty comfortable with Apple, or at least I would feel pretty comfortable with Apple laddering into a position. Buying 250 calls, super cheap for next year. If it goes down $10, buying a couple more for even cheaper, and building a position on Apple on the call side that has, an asymmetric return potential. You're talking 500%, 800%, 1,000% potential return if you were able to hit that kind of trade on Apple.
Great. Well, I'm going to get to, we've got a couple of comments coming in from the chat. So eventually we're going to talk about SoundHound and Applied Digital potentially. But let's get to, while you look those up, maybe I want to have Graham talk about LLY. This is one of your top trades of the week, right?
Yep. It's Eli Lilly. It was a powerhouse stock. Looking back about a year ago, you would have called it a powerhouse. Over the last couple of months, it's been lagging. It's been declining. We've seen that across the healthcare sector. Now, there's a few reasons I really like Eli Lilly right now. If we're looking at the sector as a whole, we just said September is typically not a great time to be long the stock market if you're trading. Well, however, if we break that down to the different sectors, healthcare is one of the very few sectors that actually is strong in September. It's not only strong in September, it's very, very strong in September, October, November, and December. So Eli Lilly is obviously one of the biggest companies in that healthcare sector. It looks really good right now. On a technical standpoint, I've got a chart uses a proprietary price action indicator on a weekly basis. And what you'd see here is that right now the indicator is showing us it's a buy signal today on Lilly. And for you longer term investors, historically, that's a 28-week hold time. So about 6 months. Now get this, that's a 15% return in 6 months. So really, really strong return over 6 months. And this signal has worked out 85% of the time, every time it triggers on Lilly. So it's a very high conviction setup for very nice returns. And I don't know if they can see that chart there, but profit target on Eli Lilly right now is at 848. That's about $100 from here. So again, a very nice return. And inside the opening playbook, we trade that with options as well, so we can really juice our returns during this period of what could be a really great run for Eli Lilly.
Yeah, that's a great one. And I like hearing about the long-term implications for this stock too. I think that's a good sign that now is a good time to get into Eli Lilly. And also the September-October uptrend for the healthcare sector. It makes sense with the seasonality of what's happening in the world. So thank you for that. Great tip. Nate, do you have a second to look at SoundHound?
Yeah, so this is one, I don't trade a ton of the lower volume stocks like these, but I will say this is one where you might get in the next couple of earnings, one of those critical moments where it flips from negative earnings to positive earnings. And those are some of the really fun outliers to play, because a lot of these stocks, especially, low dollar stocks, they move over the course of time, and earnings tend to be the big catalyst. And it's really, you're pricing in how negative the earnings are versus how negative people were expecting them to be, because you're a before profit company trying to move into a profitable company. And SoundHound is one of those ones that's gotten closer and closer. And again, the earnings are the big catalyst. So this would kind of be a fun one. It's probably not one that I would buy and hold, but a fun one where you could keep trading the earnings over the next couple of quarters with the idea that, hey, if they make that flip from expected negative earnings to actual positive earnings, they'll probably get one of those huge catalyst moves. So that's kind of what I would look at it, more of what we would call a lotto play, which might be politically incorrect for a trading show because you're not supposed to take lottery trades, but sometimes they're fun. We throw $100 on a trade that we look for a 10x around earnings. And that's probably the one that I would file that into.
Yeah, it's got to be money that you're ready to lose though, right?
Yeah, exactly right. Yeah.
On that same thought, if you want something today that's going to give you a nice little something to look at, IREN, tickers IREN. They do have earnings after the bell today, and this is a stock that is very, very interesting because it was a crypto miner. The miners they have all been suffering with the higher interest rates. They take on a lot of debt. It's not good for them. This one has pivoted its business model from crypto mining into data centers. So obviously with the huge expansion in AI and all of the energy, power, storage, data centers needed, this one's really, really been benefiting. And this is still a very small stock, but if you have a chart up, you can see it's gone from about $8 to $24, so about 200% over the last 3 months just by making that pivot and now taking advantage of this AI mega cycle going on. They have earnings today after the bell. And get this stock is expected to move 15% after the bell. Now, we don't know if that means up or down. We can't see the future, but this is one that a lot of money is pouring into right now and really could be a huge trend to still get in on early.
Yeah. Any specific plays that you would have for that one?
For me personally, with a stock that this cheap, I would probably trade the shares because you're going to offset time decay. If you wanted to trade it overnight, you can buy shares near the close today and look to sell them tomorrow or even in the aftermarket. If you wanted to trade the options, let me pull them up here. The 29th of August, that's going to be tomorrow's expiration. If you wanted to buy the 23 strike calls, they're trading about $1.69. So if IREN does get that market maker move to the upside, those should gain about 100% overnight. So that's the 29th of August expiration, 23 strike calls. And again, like you said earlier, that is money that you should be okay with losing if you're going to trade the options because it's going to be hit or miss. Either they beat earnings, they shoot up, things go crazy, you make good money, or it doesn't work out. So don't throw the whole mortgage in on it.
Good advice. And thank you for the specifics. It's good to have some specific plays that our viewers can do today. All right, let's move on to we've got some other names coming in that people want to hear about. So I'll have you look at FN. That's one that Fabrinet that they want to look at. Another one is SHAK, SHAK.
Graham's a burger expert, so he should have a good analysis on that one.
Yeah. Well, I'll start with Shake Shack. I think they have amazing cheeseburgers. Great little restaurant.
There you go. What more do you need?
Right.
We are seeing massive slowdown in consumer spending, especially hitting restaurants, especially those higher priced fast food like Shake Shack, Kava. I love Kava. It was an amazing stock for us. We bought it at 42. I sold it at $100 in under a year. But Kava, Chipotle, Shake Shack are kind of taking a beating right now as we are seeing spending slow down. So for me personally, this might be one to add to a watch list. Maybe wait for it to break above its 200-day moving average, which would currently set a alert up for if Shack gets above 115, you may be looking to buy. But we don't want to get in too early where we could be left holding the bag.
Yeah, that's a good one to look at too. I don't want to miss the other one, Fabrinet. Is that something, Nate, that you've heard of before?
I haven't traded it, but I really wish someone would have mentioned it to me about a week and a half ago because this is one of those great examples of a stock that was on a monster trend, actually beat earnings and then got crushed and then did a recovery immediately to kind of catch back, which are some of my personal favorite trades. If you guys are looking for just a couple bullet points of how I like to trade earnings often, it's not actually trading the earnings event. It's looking for good stocks in good trends that beat earnings and then go down beyond their expected move. That combination for me is a great buying opportunity. Looks exactly like what Fabrinet did. And the explosion there was all the way from about $270 a share to $354 a share over the last 6 days. So I'm not sure if I would touch it right now, but I sure wish I grabbed it back on August 20th after that, beat on earnings that actually sent it down. Looks like, over 10%. I don't have enough, insight into what the company actually does or anything like that. But that would have been the play, I think, to grab it after the earnings beat down there.
Yeah, Nate, I think that's really helpful to hear the kind of stocks that you're looking for. And what you just described, we do MarketBeat Monday live streams, and we had a whole live stream where every stock that people were bringing up were stocks that did well on earnings and then somehow still were going down a week after a really good earnings. So a lot of stocks definitely qualify for that. Let's go into, we've probably got time for maybe one or two more. Is there any more that you guys want to talk about specifically?
Well, I know someone mentioned ARM in there. ARM was a really hot stock for a while, actually outpacing AVGO, Nvidia, and AMD there for a while. and then just kind of got stuck after being overheated for a while and hasn't really been able to break out of the groove. So that's also one Graham kind of mentioned, putting it on the watch list. So that's one where if it can gain momentum again, I think you can put it in that catch-up watch list. So Graham and I will often do what we call catch-up trades. So that's like, Coinbase is lagging way behind Bitcoin. And so if it catches some momentum, you have a reason to believe it's going to catch up to Bitcoin because it's been lagging behind. Or, AMD lagging way behind Nvidia, and then AMD starts picking up momentum. Okay, it has a sister company that it can play a catch-up trade to. NVO and LLY fall into that category. And ARM's one that had all that momentum, is lagging behind, and could be a catch-up opportunity. But I would wait for it to prove itself before I was in on that.
Yeah. Apple's another great example right now. I mean, Microsoft has absolutely blown up in a good way. Apple has not. If Apple I think Apple, according to my research, has already sparked that momentum drive where it is a buying opportunity right now today. And I believe it's going to catch up to that growth Microsoft has seen. And so I'm hopeful, but I also believe that Apple will see probably twice of what the return Microsoft will give over the next few months ahead. For something right now, Gilead Sciences, GILD is the ticker. This has been in a very, very strong trend. It's made a pullback over the last couple of weeks. The reason I like it right now is because one of the things we do is we look at the data and we see what stocks typically go up the same dates every single year, and this, over and over again for the last decade. So GILD, Gilead, is a stock that has gone up every year for the last 10 years from August 29th through September 20th. 100% of the time over the last 10 years. It does not mean it's guaranteed to happen again, but seasonally speaking, from the data, GILD is a buy starting tomorrow or today if you want to get in a day early. Averages 3% over the next 3 weeks. Of course, with the options we trade, we're going for 100% on it from a very tiny move. It's pretty shocking. I hope you guys can get into the opening playbook because I think you will be a little bit in disbelief at first on how we're able to rig these things up. But GILD is a good one to be looking at to buy right now.
Very good. I like the stock tips. We're going to close up in a minute. I want to get to one more that he asked earlier. So Applied Digital, you brought up IREN. This is a very similar company, right? Applied Digital started as a Bitcoin miner, now a data center company. This stock has been crazy for our viewers over the last few months. Up 121% year to date, up about 60% in the last month. Thoughts on this stock for trading? Is it something that's come up for the options plays?
By the way, that's one that kind of falls very close in that category I was just talking about, where they had negative expected earnings, didn't quite get profitable, but basically put a break even together. And since then has absolutely launched the stock. I mean, the stock's up 65%, 70% at the peak since then. So this is one, I think, if you're okay with high risk and you have the idea that, listen, because this is what I would say. If people say like, hey, we're in an AI bubble, I would say, no, we're not even close to an AI bubble. We might have some stocks that are going to bubble and blow up, but we're actually at the very beginning of AI potential. Just like in 1999, we were not in an internet bubble. The internet was actually worth way more than anyone could have ever imagined in 1999. We were not in an internet bubble, but still we had lots of stocks that were in a bubble. And so if you're someone who believes, like I do, hey, we're not even close to an AI bubble, there's still so much potential, and you're willing to ride some volatility for the people who are the early movers and they're in the right place within AI, then I think some of those stocks make sense. My only counter would be, I would be very conservative with risk allocation, because AI is so dynamic that the things you think AI is being built on today might actually not even be required a year from now because it moves that quickly.
Yeah, these stocks are constantly moving. The technology is changing. So another good advice on this one, guys. Thank you for sharing your perspective today. I do want to know, or I want to share, if you are somebody who is watching this and wants to learn more from you guys, I have a sign up right now of, if you have seen on this channel, we've had Lance on before. Lance is a part of your new money crew, and you have daily scans plus one trade. What's this about?
Yeah, so actually we put together Graham's research, my research, and Lance's research together a while ago. We were going to build like a high-end premium product. But then we thought, why don't we just give away the daily scan for free? It takes into account a lot of Graham's seasonal analysis, some of my price action analysis, and then some of Lance's insider option trading analysis to rank stocks. And all you do every day is get an email that says, hey, here's the top 3 stocks. ranked on the list, and you get it for free just by signing up. And then if you're on the text list, put your phone number in, you actually get an individual stock that's kind of on the secret list, which is basically the list behind the scenes that doesn't make the top 3, but we really like. So you get both of those. They're both free. Never have to pay for them. And it's just our way of trying to give some value up front to some of the things that we're working on.
Very good. Well, when is the next time you're live today? If somebody wants to join you later today, when's your next live today?
Yeah, 3:30 p.m.
Yep. Eastern time. Yep.
Yes, Eastern. Yeah, half hour before the closing bell, will be live. We have a wild session today because on Thursdays we put a whole bunch of live trades out there that are going to expire the next day. So it'll be a fun session. If you're new, it'll probably be like drinking out of a fire hydrant, but we welcome you. It's a lot of fun. You'll hear from a lot of the other people who are on our shows who never imagined they'd be trading actively the way they are right now, but have really had a lot of fun with it and had some great results. So we'd love to have anyone and everyone on 3:30 p.m. Eastern.
Yeah, we'll walk through, like Nate said, quite a few different trades together that you can take today. But I do want to remind you, to Nate's point there, in the morning, the 10 a.m. session, that's when we're slow, we're doing training, we're walking you through everything, trying to get you the foundation. And then in the afternoon, we're applying kind of what we learned. So if you're catching up today's session, it might be a little bit faster paced than maybe you're used to, but I promise you, we will get you taken care of in the morning sessions, and then we'll apply it in the afternoon.
Awesome. Well, guys, so great to have you on the show. Again, this is our first top trades video. We're going to be back on again Tuesdays going forward. So for the next month, every Tuesday at this time at 12:30 Eastern time, join us for top trades of the week. We're going to hear from these guys and share more of their knowledge and really get you into some great info on some different plays that you could make just this week. So thanks again, guys. And thank you guys for joining us for this live today. Have a great rest of your day. And as always, happy investing.
Thank you.